Hello again, and welcome to this first video in our latest series, Migrating from MQL4 to MQL5, Guidance for Algorithmic Traders. Now, the motivation behind these tutorials is due primarily to there being no centralized source of A, approachable, B, structured, hands-on training that one makes a clear distinction between MetaTrader 4 and 5, and what the latter actually brings to the table other than just a new programming language and platform enhancements that traders don't necessarily know what to do with or even know about for that matter. Another motivation is to describe through not only an explanation, but through in-depth programming examples, providing source code, of course, along the way, on how to convert existing expert advisors and indicators in MQL4 to MQL5 and leverage the new capabilities of MT5 in the process. Also, to make a case for how the MQL5 standard library greatly simplifies programming expert advisors and indicators, and it does so in object-oriented fashion, much cleaner, much more structured, and effectively declutters the process of trading strategy R&D. So traders can focus more on logic and execution instead of lower-level issues. Now, in order for us to do this, it's important that traders first understand the key differences between the two platforms that will eventually affect their development, which is what we'll be covering in this video today. Please note that this video series in its entirety is not meant to be a walkthrough or usage tutorial for MetaTrader 5. Far from it. It's nothing like that at all. It in fact assumes that viewers already have experience with MQL4 and have developed and or modified EAs and indicators before. And there will be a lot of programming involved. There will be code written and complex issues discussed down the line. And it will all be very much geared towards serious algorithmic traders looking to exploit new technology for potential gain. So if you are new to MetaTrader altogether, I'd advise that you first get to grips with MetaTrader itself and then MQL4, and after which this tutorial series will make a ton more sense. So without further ado, let's go on to our agenda. So as I mentioned, we're going to discuss the differences between MetaTrader 4 and 5 today. And in doing so, we'll need to follow through a few main themes, starting with what the two platforms support and how they differ in terms of market and order types and available timeframes. The second theme would be for execution, where we'll discuss orders and modes and the commissions, how they are affected by in the two different platforms. We'll talk about the strategy tester, the differences in capabilities between the MetaTrader 4 strategy tester and MetaTrader 5 strategy tester and how they affect backtesting. And finally, we'll go through a detailed list of what we'll be covering in future tutorials, which will include a code breakdown of MQL4 to MQL5, detailed object-oriented R&D and related concepts. So let's begin. Starting with support. So MetaTrader 4 and 5 differ in a few ways. In terms of markets supported, MetaTrader supports Forex and CFDs, whereas MetaTrader 5 supports Forex, CFDs, stocks, commodities, futures, and other exchange-traded instruments as well, due primarily to two modes of operation that exist in MetaTrader 5 as compared to 4. And these are netting and hedging. Hedging is what MetaTrader 4 uses by default, whereby you can place orders in both directions simultaneously on any given asset. Whereas in MetaTrader 5, you can use hedging mode for Forex and CFDs. The default mode at Darwinex is hedge when you first download the platform and install it for a Forex and CFDs account. But the netting mode enables MetaTrader 5 to support exchange-traded assets, which we'll cover in future tutorials as well. In terms of timeframes, MetaTrader 4, of course, contains its default 1 through to 30, 5, 15, 30, hourly, 4 hourly, daily, weekly, and monthly. This has been extended considerably in MetaTrader 5. It does contain all the existing timeframes that are supported by MetaTrader 4, but on top of those, it also includes 2, 3, 4, 6, 10, 12, and 20-minute charts, as well as 2 hourly, 3 hourly, 6 hourly, 8 and 12 hourly charts as well. In terms of order types, MetaTrader 4, of course, you'll remember, has market orders. Both MetaTrader 4 and 5 have market order functionality to be able to buy and sell at market. But MetaTrader 4 sports the buy stop, sell stop, buy limit, and sell limit, whereas MetaTrader 5 has two additional order types called buy stop limit and sell stop limit. And we'll cover these shortly, describe how they actually work. Now, to do so, we need to recap over our existing order types, starting with buy stop here. A buy stop order is placed above the current price and is essentially an order to the platform that please execute at the ask price specified in the buy stop order when it is reached. And the anticipation here is that you expect price to continue going long. A sell stop order, to the bottom right here, is literally the opposite of a buy stop, where price is currently somewhere and you place an order to sell at the bid price somewhere lower than the current market price in anticipation that the market will continue falling. With a buy limit order, price is currently above where you'd like to place the buy limit order, and the buy limit order is in anticipation of a market reversal. So the price that you specify in your buy limit order has to be below the current market price, and it is you essentially asking the platform to execute an order at the ask price less than or equal to the price specified in the buy limit order. And again, you're anticipating the market to reverse and continue long at this juncture, hence the buy limit order. With the sell limit order, you're doing the opposite of what you did with the buy limit, and you're placing an order instructing the platform to execute a sell order at the bid price once the bid price is reached or exceeded. And your anticipation here is that the market will reach this point above where the market price currently is and then reverse. So those are your four main types of orders: buy stop, buy limit, sell stop, and sell limit. MetaTrader 5 introduces two additional types of orders called buy stop limit and sell stop limit. And to demonstrate how they operate, they're particularly useful for trading retracements or other use cases and make for some interesting order types to use programmatically. So let's first understand and visualize how they actually function prior to continuing forwards. So to demonstrate how these two additional order types work, I've opened up a MetaTrader terminal with a demo account, just to quickly run through some examples of the scenarios involved where you'd consider using them, and then how to use them. So we'll start with the buy stop limit, and first we'll identify the use case. What is the use case for considering a buy stop limit order in MetaTrader 5? So there may be scenarios where we've discussed buy stop, sell stop, buy limit, sell limit. And in the case of the buy stop, you place an order somewhere above the current price, asking MetaTrader to execute at the ask price above the current price when that ask price is reached or exceeded. Now, in that case, you're buying into rising price, and your anticipation is still that the price is going to rise. That's why you're considering a buy stop order. But MetaTrader 4 doesn't have any functionality or an order type that allows you to reach a certain price, even if you think the price is going to rise, or you have some resistance level that you're monitoring, or some indicator that's pointing to price exhaustion at a certain point, after which there may be some correction prior to price continuing long again. You don't have an order type for that in MetaTrader 4, but you do in MetaTrader 5. And that's called the buy stop limit order. So we're on the GBP USD chart here, and let's run through an example of how to use this order. So we open up the new order window, switch to pending order, and then change the type to buy stop limit. Here you see two price fields. One is the price itself, the price at which you'd like to set the buy stop limit order to trigger. And there's a stop limit price. I'll explain this stop limit price in a minute. What we're essentially doing is we are instructing with this order type, buy stop limit, we are instructing MetaTrader to wait for a price to be reached that is currently above the current market price. So that's the first step. We have the price here on this chart is 1.307879. It's hovering around this range. If I expect the pound dollar to continue going long, but I don't necessarily want to buy into that movement long when it reaches a certain point. I'd like to wait for a correction. Then what I'll do here is, let's assume that point is 1.3100. I'll first enter 1.3100 as the price at which I'd like this buy stop limit order to be placed. Now, with a traditional buy stop order, this would have gone into execution immediately, and you'd have yourself a market order, which has bought into the pound dollar at that price of 1.3100. But perhaps I'd like to wait for the price to correct a certain amount prior to continuing on in that same direction, which would require me to have a buy limit order if I'd already reached the price 1.3100. In MetaTrader 5, with the buy stop limit order, you can tell MetaTrader to wait for this price to be reached, after which you can tell it to open a buy limit order at a price that is below that price. So in this case, we're waiting for 1.31000, and once we reach this point, for some reason, I think that the price is going to correct a little bit to 1.3085. With the buy stop limit order, I can now wait for the price to reach 1.3100, after which I can instruct MetaTrader to put a buy limit order in for me at 1.3085. And that's it. Place the trade. So if we go down to a slightly finer time frame, we'll be able to see the difference between these prices. Here we are. So we have placed a buy stop limit order at the price 1.3100. Price has not reached that level yet. When price does reach that level, we have a buy limit order waiting to be executed at that point. This buy limit order is very much virtual at this point because you can't execute a buy limit. You can't place a buy limit order when price is below the price at which you'd like the buy limit order to be. That is the problem that buy stop limit solves by allowing you to place this order at a certain price that once that price is reached, you can then place a buy limit order immediately, accounting for some correction that you perceive may happen. And same is the case for, let's close this order now, and let's go explore the sell stop limit use case, which is exactly the opposite of what we just talked about. So with the sell stop, we're going to go again into the new order. And over here, we're going to switch to pending order. Same scenario here, select type, sell stop limit. And in this case, it's the exact inverse of what we were just talking about. Now price is somewhere, and I think price is going to fall. But I don't want to place a sell stop because I fear that I may sell into falling price, and there may be a correction, some sort of mini rally prior to it continuing downwards. So in that case, I will specify a level at which I think price, a level that price I believe will reach. Let's assume that in this particular case, that level is 1.3050. Once I reach this point, if it is my intention to continue shorting this market, but I'd like to wait for a bit of a correction, then I can instruct MetaTrader 5 to put a sell stop limit order at this point, 1.3050, and once price reaches this point, to put a sell limit order at a price higher than this point to give me a shot at getting a better price selling into this market. So in this case, I'd be putting that sell limit at 1.30, let's assume 60. Let's make it bigger so we can see it on our chart here. This is just a demonstration trade. So here we are. So we've placed a sell stop limit instruction, sent MetaTrader 5 the instruction that once you reach 1.3050, please execute a sell limit for me at this price here, which is 1.3075. And that's how buy stop limit and sell stop limit orders work. Okay, so that was it for order types. Now let's move on to execution, the key differences in execution between MetaTrader 4 and MetaTrader 5. And the reason we're going through all of these things is, once again, not to go through some sort of walkthrough here of differences between MetaTrader 4 and 5, but to identify those particular differences that matter to us in terms of our algorithmic trading strategy development. And hence execution, which is significantly different in MetaTrader 5. It's important that we understand how that works in order to then deal with it in code, as we will later. Now, MetaTrader 4 and 5 have different execution mannerisms. So we have market execution in MetaTrader 4, whereby you have the trader sending an order to, let's say, buy the euro dollar at a certain price. The broker receives that order and attempts to execute that order at the best available price. And then once that execution happens, you have the order sitting in your terminal as executed, and you're now in the market. Programmatically, it's dealt with in exactly the same fashion. In MQL, you will send an order using the order send function with your parameters. If it's a market order, then you'll just send it without specifying a price and get the best price back that's available at the time, along with your stop loss and take profit information and your maximum slippage tolerance and trade comment and things like that in MQL4, if you're already familiar with it, as we've discussed so far. But MetaTrader 5, it's a 3-step process where you don't deal with just the order. You execute an order like you do in MetaTrader 4, but once you've sent the order, a deal is created when that order is filled, and then a position is created when that order is complete. And all of this will become significantly clearer later once we start writing code. The important thing to remember right now is that we're not dealing with simply orders from a programming perspective anymore as we did in MQL4. We're now dealing with orders, deals, and positions. But in practice, we'll only be dealing with orders and positions, really. You don't necessarily need to be dealing with deals literally in your code in MQL5. There may be use cases where you require going through your deal base as well. You have access to them through MQL5, but it isn't. In most use cases, it won't be necessary to go through deals. Just orders and positions is what we'll be working with primarily in MQL5. So this was a little introduction to the differences between MT4 and MT5 orders in terms of execution. And the next phase really is to take a look at how this is relevant in the context of hedging and netting modes. So netting is the mode that MetaTrader 5 was originally launched with. It is a mode whereby you can't have more than one position on a particular asset at any given time. So you can't long and short the asset at the same time simultaneously as you can in hedging. Hedging is the default mode that MetaTrader 4 operates in. So anyone who's been using MetaTrader 4 or writing code, EAs, indicators, etc. for MetaTrader 4 has been using hedging functionality from day one, because MetaTrader does enable on Forex and CFDs to go long and short the same asset at the same time. In the netting mode, however, that ability disappears, and you are forced to deal with your position in terms of volumes and one-sided only. So for instance, you could go long a certain exchange traded instrument by a certain volume. Let's call that volume, let's say that's 100. If you wanted to go short that instrument 100 as well, you couldn't have both trades, no locking in place in netting mode. So the moment you'd execute 100 sell, the previous 100 would then be reduced by 100, effectively making your position 0 and taking you out of the market. In MetaTrader 5, both modes are available, hedging and netting, but for FX and CFDs, the mode hedging is what prevails. When you download a MetaTrader 5 terminal from Darwinex on FX and CFDs, the mode by default is hedging. Right, so let's move on to the next phase here, which is commissions in terms of execution. Commissions in MetaTrader 4 are round trip and are applied in full as you enter an order. So the moment you've executed something, the full commission is applied to that transaction. In MetaTrader 5, it's different. You have 50% at entry and 50% at exit of the commission, total commission to be charged. Let's now move on to key differences between the strategy testers of MT4 and MT5 and how they will impact your future trading strategy R&D in your conversion from MQL4 to MQL5 or in your development entirely in MQL5. Firstly, MetaTrader 4, the key difference between it and its counterpart 5 is that MetaTrader 4 is 32-bit in architecture and MetaTrader 5 is 64-bit in architecture. So significantly faster owing to just architecture at this point when we've just discussed this. MT4 is single-threaded, MT5 is multi-threaded, so you can take full advantage of multi-core CPUs that are the norm these days with most laptops, most machines, most desktop PCs all have multi-core CPUs, and MetaTrader 5 takes full advantage of multi-core CPUs, as we'll discuss a bit shortly on its use of agents and how it goes ahead and leverages all available resources should you want it to. MT4 has single asset backtesting. So when you open up the strategy tester in MT4, you can only backtest a particular strategy one symbol at a time. And in terms of volumes, you only have tick volume available in MetaTrader 4, and tick volume translates to the frequency at which price arrives into your chart, into the terminal. That's tick volume. So the number of ticks per certain unit of time that you're following the chart on. In MetaTrader 5, you have multi-asset backtesting. So you can backtest the same strategy on a select list of assets from the data window, the market watch window on your platform, or you can insert the symbols or assets that you'd like to trade within your script itself, and the EA will handle it in backtesting without you having to select any other symbols at the back on the backtest interface. You also have both real and tick volume available inside MetaTrader 5, but the real volume depends on the underlying instrument. So if you have an exchange traded instrument being served to you through MetaTrader 5, then if that exchange traded instrument carries the feed for volume, that feed will then appear in MetaTrader 5. However, for all other FX CFD assets on the platform, you will again just have access to tick volume. You also have market depth availability in MetaTrader 5 that previously wasn't available in MetaTrader 4 in a functional state. And that serves both FX CFDs and exchange traded instruments. The market depths obviously differing by the type of instrument that you're applying it to on your terminal. MetaTrader 4's any backtest can use only local resources. And in the case of a single threaded application like MetaTrader 4 being 32-bit, that is a constraint in itself. Backtesting using only local resources of which you can't really exercise the full potential of a multi-core CPU is a drawback that was addressed in MetaTrader 5. In MetaTrader 5, backtests can use local, remote, and MQL5 cloud resources. In terms of local, because of its multi-threaded nature, you can put all CPU cores available to you to use in your backtesting when using MetaTrader 5. They also have the ability to connect to the MQL5 cloud to get more processing power in, so you can backtest using the full potential of the cloud. That we won't be exploring today, or in most future tutorials we won't be, other than in passing, going through those particulars. So those are the key differences between the strategy tester and how they impact you from a programmer's perspective, is that if there was a constraint in your MQL4 application, your expert advisor, for instance, and that can benefit significantly in backtesting from having access to all CPUs. It enables you to do a lot more things, or do a lot more complex or more intense backtests concerning many symbols. If you have access to a multi-core CPU and you believe that you'd like to do a retest on a particular strategy across multiple assets at the same time, that process would be faster and obviously possible in MT5, but not in MT4. In future tutorials, we'll get more into the nitty-gritty of it all and discuss things that are relevant from a programmer's perspective in terms of code. So MQL4 and 5 are significantly different in terms of how you structure your application being an expert advisor or an indicator. Our focus here in this particular series will be on expert advisors, but we will touch upon indicators in terms of their development and how they are used in an expert advisor. Future tutorials will cover syntactic as well as methodic differences between MQL4 and MQL5, and will demonstrate each and every difference we cover with source code that we'll either write during the tutorials, or we'll have prepared the code for you beforehand and we will demonstrate it during these tutorials. We'll talk about definitions in terms of timeframes, macros, and constants between MQL4 and 5, the differences therein, and how you can deal with them with source code examples and how that's done, and also for environment variables. We'll be looking at sanity checks in terms of account and terminal information, validation, and error checking. We'll talk a lot about data wrangling and how it differs between MQL4 and MQL5, and how to port any MQL4 code to MQL5 easily using a few best practices that we'll go through in this particular section of tutorials. We'll cover data types, casting and conversion, arrays, and time series methods and functionality. We'll also cover helper methods that include printing and formatting input-output, as well as data, date, time, and file input-output as well. And finally, the meat of these tutorials will really lie in the anatomy sections, where we'll talk about the anatomy of an MQL5 expert advisor as compared to an MQL4 expert advisor, and how to port code from MQL4 to MQL5 in a manner that is object-oriented, neat, and scalable, extensible, should you need to or wish to add further functionality to code you've ported over from MQL4. We'll do this in two ways. We'll write expert advisors from scratch without using the MQL5 standard library, and then we'll generate some template expert advisors to start working on using the MQL5 editor that will involve the MQL5 standard library. For both indicator and expert advisor use cases that we cover, as well as code that we write during or serve you during these tutorials. The MQL5 standard library greatly simplifies the process of dealing with lower level functionality, such as trading functions, order checking, sanity checking of orders, things like that, maintenance criteria that we'll discuss, things that usually have to be coded from scratch in MQL4 in the absence of any object-oriented framework or library, should you not be using that in MQL4. The ability to write object-oriented code exists in both MQL4 and MQL5, of course, but with MQL5's feature set being enhanced by the additional capabilities of the platform, it makes sense, stepping into the world of MQL5, to start from scratch in a manner that is not only robust, uses all the features, the additional features and capabilities of MetaTrader 5, but also is done in a manner that you can scale and extend conveniently using a very large, exhaustive list of classes pre-written for you in the MQL5 standard library. And that's pretty much it. So that is going to require a fair number of tutorials, and we'll be producing these as we go along and keeping you informed via our social and YouTube channels, as well as email. Once again, as always, if you enjoyed this presentation, then please do consider sharing it with your social networks, friends, colleagues, and co-workers. Hopefully this series will clear up some misconceptions as regards MQL5 and MetaTrader 5 in general. And the main motivation, as I mentioned earlier, behind this series is to make it simple, effective, and approachable for algorithmic traders who have been using MQL4 but have not considered MQL5 yet, to one, show them why they can benefit from having a MetaTrader 5 in the picture if they're already on MetaTrader 4, and to make the process, the transition, the ability to engineer a code change from MQL4 to MQL5, to make that process as easy, simple, approachable, and sensible as possible for everyone concerned here. Thank you very much for your time. See you in the next tutorial.